Have you ever noticed something strange about the world of trading? Before someone has placed their very first trade, they're already thinking about buying a new car. They're imagining quitting their job. They're calculating how long it will take to become a millionaire. Some people even start spending profits they haven't made yet. It's human nature. We all want a better life. We all want financial freedom. There's nothing wrong with dreaming big. In fact, I encourage it. But there is one dangerous habit that almost every beginner has, and it's the reason why most people never survive long enough to become consistently profitable. They think about making money before they think about protecting money. That single mistake has emptied more trading accounts than bad strategies ever have. If you're new to trading, or if you've been losing money and wondering why, then this video may be the most important one you'll watch. Because today, I'm not going to teach you a strategy. I'm not going to show you a magical indicator. I'm not going to promise you that you can turn $100 into $10,000 in 30 days. There are already enough people making those promises. Instead, I want to teach you something much more valuable. I want to teach you how to think. Because trading is not just about charts. It's not just about candlesticks. It's not just about support and resistance. Trading is a game of decisions. And every decision either protects your future or destroys it. Welcome to THINKTRADE, where we don't just learn how to trade. We learn how to think before we trade. Let me tell you something that many people won't tell you. The market is not your enemy. Read that again. The market is not trying to steal your money. The market doesn't know you exist. It doesn't know your name. It doesn't know where you live. It doesn't know whether you're rich or broke. It doesn't know that your rent is due next week. It doesn't know that you're trying to pay school fees. It doesn't know that you're hoping trading will solve all your financial problems. The market simply moves. That's all it does. It moves because millions of people around the world are buying and selling at the same time. The market has no emotions. The problem is, you do. Every mistake in trading begins with emotions taking control over decisions. Fear, greed, hope, impatience, revenge, overconfidence. These emotions don't disappear when you open a trading account. In fact, they become stronger. That's why trading is one of the few professions where your greatest opponent is not another trader. It's yourself. Think about learning how to drive. Would you buy the fastest sports car you could find and immediately drive onto a busy highway without any lessons? Of course not. You would probably crash, not because the car is bad, not because the road is bad, but because you don't yet have the skills to handle the situation. Trading is exactly the same. Yet every day, thousands of people deposit money into a trading account and start clicking buy and sell as if they're playing a mobile game. No education, no plan, no risk management, no understanding of market psychology. Just hope. Hope is a beautiful thing in life. But hope is a terrible trading strategy. I remember when I first became interested in trading. Like many beginners, I believed the biggest challenge would be finding the perfect strategy. I spent countless hours looking for the secret indicator, the perfect moving average, the perfect entry, the perfect signal. Every time I lost money, I blamed the strategy. I blamed the market. I blamed the broker. I blamed the news. I blamed everything except the real problem: my decisions. Eventually, I realized something that completely changed the way I looked at trading. A bad trader can destroy a good strategy, but a disciplined trader can often make an average strategy profitable over time. That realization changed everything, because success wasn't hiding inside another indicator. It was hiding inside better decision-making. One of the biggest lies beginners believe is this: if I can just find the perfect strategy, I'll never lose. That sounds nice, but it isn't true. Every trader loses. Read that again. Every trader loses. Professional traders lose. Institutional traders lose. Hedge funds lose. The difference is not that professionals never lose. The difference is that professionals know how to lose. They lose small. Beginners lose big. Professionals expect losses. Beginners take losses personally. Professionals move on. Beginners panic. That's the difference. Imagine two people opening a restaurant. The first person believes every customer will love the food. The second person knows that some customers won't come back, no matter how good the food is. Which person is more realistic? The second one. Trading works the same way. No strategy wins every trade. No trader predicts every market movement. If someone tells you otherwise, be very careful. Because they're selling dreams, not reality. Let's imagine something. Suppose I offered you a business. Every month, this business makes money. Some months it makes a lot. Some months it loses money. But at the end of every year, it consistently grows. Would you accept that business? Most people would say yes. Now imagine that same business is trading. Suddenly people say, I don't want any losing trades. Can you see the contradiction? People accept losing days in almost every business. Restaurants have slow days. Shops have bad weeks. Farmers have poor harvests. Companies have difficult quarters. But somehow, new traders expect perfection. That expectation is one of the fastest ways to destroy your confidence. Losses are not proof that you're failing. They're part of the business. The question isn't whether you'll lose. The question is how much you'll lose when you're wrong. Now here's a question I want you to answer honestly. Why do you want to trade? Think carefully. Don't rush the answer. Maybe you want financial freedom. Maybe you want to spend more time with your family. Maybe you want another source of income. Maybe you're tired of struggling. Those are all understandable reasons. But if your only reason is to get rich quickly, you're already in danger. Because the desire to get rich quickly creates impatience. Impatience creates emotional decisions. Emotional decisions create unnecessary losses. And unnecessary losses destroy accounts. The market rewards patience far more often than excitement. There's another mistake I see almost every beginner make. They focus on how much they can make. Instead, they should be asking, how much can I afford to lose? That question changes everything. Imagine you're building a house. Would you spend all your money on beautiful paint before laying the foundation? Of course not. The foundation comes first. Risk management is the foundation of trading. Profits are the paint. Most beginners try to decorate a house that hasn't even been built. And then they wonder why everything collapses. Here's a sentence I want you to remember for the rest of your trading journey. Your first job is not to make money. Your first job is to stay in the game. Think about that. If you lose your entire account this week, you don't get another chance next week. If you protect your capital, the opportunities will always come. The market opens again tomorrow. The market opens again next week. The market opens again next month. But only if you still have money to trade. The market gives endless opportunities. Your capital does not. Imagine two traders. Both start with exactly $1,000. Trader number 1 believes confidence means risking everything. Every trade is huge. Every position is oversized. Every win makes him feel invincible. Every loss makes him angry. After a few winning trades, he believes he's discovered the secret to trading. Then one bad day arrives. One unexpected market move, one emotional decision, one refusal to accept a small loss. Suddenly, most of his account is gone. Instead of stopping, he increases his position size because he wants to recover everything. Hours later, his account is empty. Now let's look at trader number 2. He starts with the same amount of money. But before taking a single trade, he asks himself one question. What happens if I'm wrong? That single question changes every decision he makes. He risks only a small amount. He accepts that losses are normal. He never tries to get rich in one trade. He understands that trading is not a sprint. It's a marathon. After 1 month, he hasn't doubled his account. After 3 months, he still isn't driving a Lamborghini. But something far more important has happened. He's still trading. He's still learning. He's still improving. And because he protected his capital, he has given himself something priceless. Time. Time to gain experience. Time to improve his psychology. Time to become the trader he couldn't become if he had blown his account in the first week. And that is the lesson I want you to carry with you today. Before you dream about making your first $1,000, make sure you're capable of protecting your first dollar. Because in trading, survival comes before success. And without survival, success never has a chance. Now, let me ask you a question. Have you ever noticed that most people don't respect money until they lose it? When someone has a full trading account, they become careless. Let me just take one more trade. I'll risk a little more this time. This setup looks good enough. I'll recover my losses with a bigger position. Those 4 sentences have destroyed more trading accounts than almost any market crash. Here's something I've learned over the years. People don't usually blow their trading accounts because of one terrible trade. They blow them because of a series of small, emotional decisions. 1 impulsive trade becomes 2. 2 become 5. 5 become revenge trading. Revenge trading becomes panic. Panic becomes account destruction. The account wasn't destroyed in one moment. It was destroyed decision by decision. That's why THINKTRADE isn't just about learning the market. It's about learning yourself. Because if you don't understand your own mind, the market will expose every weakness you have. The market doesn't care about your story. This is one of the hardest truths for beginners to accept. The market does not care why you're trading. Maybe you're trying to pay your rent. The market doesn't care. Maybe you're trying to pay your children's school fees. The market doesn't care. Maybe you lost your job. The market doesn't care. Maybe you desperately need to make money today. The market doesn't care. That sounds harsh, but it's actually good news. Why? Because it means the market isn't against you either. It isn't trying to punish you. It simply moves according to supply and demand. Your personal situation has absolutely no influence on what happens next. And that's exactly why emotional trading is so dangerous. If you're trading because you need money, you're already putting yourself under pressure. Pressure changes how you think. Pressure makes you see opportunities that aren't really there. Pressure convinces you to ignore your rules. Pressure whispers, this trade has to work. But the market doesn't know it has to work. Never trade from desperation. One of the biggest mistakes people make is believing trading is the solution to financial desperation. If your electricity bill is due tomorrow, if your landlord is waiting for rent, if you're borrowing money to survive, trading is not the place to solve that emergency. Why? Because desperation destroys objectivity. Imagine a football player taking a penalty kick. If he's calm, he thinks clearly. If someone tells him, if you miss this penalty, your entire life is over, his performance immediately changes. His muscles tighten, his breathing changes, his thinking becomes clouded. Trading works exactly the same way. The more you need a trade to win, the less likely you are to make a good decision. Ironically, the traders who need money the least often trade the best. Because they are free from emotional pressure. Fear and greed. The two silent enemies. Let's talk about the two emotions that quietly control most traders. Fear and greed. Fear tells you to close a winning trade too early. You've probably experienced this. Your trade goes into profit. Instead of following your plan, you think, I should take the money now before it disappears. So you close it. 5 minutes later, the market moves exactly where you originally expected. You left hundreds of dollars on the table. Not because your analysis was wrong. Because fear made the decision. Now let's talk about greed. Greed works differently. Greed tells you, don't close yet. It will go higher. Just a little more. Then the market reverses. Your profit disappears. Sometimes it even becomes a loss. Fear cuts winners short. Greed lets losers grow. Both emotions are expensive. Very expensive. Confidence can be dangerous. Most people think confidence is always a good thing. Not in trading. There are two kinds of confidence. Healthy confidence says, I trust my process. Dangerous confidence says, I can't lose. The moment you believe you can't lose, the market begins preparing a lesson. Winning several trades in a row is often more dangerous than losing several trades. That might sound strange, but think about it. After 5 consecutive losses, most people become cautious. After 5 consecutive wins, many people become careless. They increase their position sizes. They ignore their rules. They enter trades they normally wouldn't take. Why? Because success can make you overconfident. And overconfidence is just another form of emotional trading. Professional traders know something beginners often forget. The market has a way of humbling everyone. No exceptions. The 3 questions every trader must answer. Before you click buy, before you click sell, ask yourself 3 simple questions. Question number 1. Why am I entering this trade? Not because someone on social media said so. Not because an influencer posted a screenshot. Not because you're bored. Not because you've been watching charts all day. You need an actual reason. A reason based on your trading plan. Question number 2. Where will I admit I'm wrong? This is where many traders fail. They enter a trade without deciding where they'll exit if the market moves against them. Then the market starts falling. Instead of accepting a small loss, they move the stop loss farther away. Then farther. Then farther. Eventually, there is no stop loss anymore. There is only hope. Hope is not risk management. Hope is emotional attachment. Question number 3. How much money am I willing to lose? Notice I didn't ask, how much do you want to make? I asked, how much are you prepared to lose? Because that's the only number you can truly control. You cannot control the market. You cannot control the outcome. But you can control your risk. And that's where discipline begins. One trade means almost nothing. This is another lesson that changed my thinking forever. One trade doesn't prove you're a good trader. One trade doesn't prove you're a bad trader either. Anyone can win one trade. Anyone can lose one trade. Professional traders don't judge themselves by individual trades. They judge themselves over a series of trades. Imagine flipping a coin. If you flip it once, anything can happen. Flip it 1,000 times, and patterns begin to appear. Trading is similar. Your consistency isn't measured by one brilliant trade. It's measured by hundreds of disciplined decisions. Stop celebrating one lucky win. Stop crying over one unlucky loss. Ask a different question. Did I follow my rules? If the answer is yes, you should be proud of yourself, even if the trade lost money. Because good decisions eventually create good results. Bad decisions eventually create bad results. The outcome of one trade is temporary. The quality of your decisions is permanent. Stop chasing the market. Have you ever watched the market move quickly and thought, I missed it? Then you jumped into the trade late, only for the market to reverse immediately? Almost every trader has done this. It's called chasing, and it's one of the most expensive habits in trading. The market is like a bus. If you miss one bus, another one is coming. You don't run into traffic trying to catch the bus that's already gone. You wait for the next opportunity. But beginners don't think that way. They believe every missed trade is the last opportunity they'll ever have. That's called the fear of missing out. FOMO. FOMO causes traders to abandon patience. Patience is replaced with urgency. Urgency creates mistakes. Remember this: the market has been here before you were born. It will still be here long after today's trading session ends. You don't have to catch every move. You only need to catch the right ones. Patience is a superpower. We live in a world that rewards speed. Fast internet, fast food, instant messages, one-click shopping. Naturally, people expect fast trading success too. But the market doesn't reward impatience. It rewards discipline. Sometimes the best trade is no trade. That statement frustrates beginners, because they think trading means constant action. Professionals know better. Professionals understand that waiting is part of trading. Imagine a lion hunting. Does it run after every animal it sees? No. It waits. It watches. It studies. Then it strikes at the right moment. A trader should think the same way. Not every setup deserves your money. Not every chart deserves your attention. Not every market deserves your participation. Sometimes protecting your capital means doing absolutely nothing. And surprisingly, doing nothing is one of the hardest skills a trader will ever learn. There is an old saying that I think every trader should remember. The market will always give you another opportunity. The question is, will you still have money when it arrives? Think about that for a moment. Because opportunities are unlimited, your trading capital isn't. Protect it, respect it, treat every dollar in your account like an employee working for you. Don't send your employees into battles they cannot win. Give them the best chance to come back with more than they left with. That is how professionals think. And that's the mindset we're building here on Think Trade. Now let me tell you something that completely changed the way I look at trading. For a long time, I believed profitable traders had some kind of secret. I thought they had access to better indicators, better software, better information, better brokers. Maybe they knew something the rest of us didn't. But after studying successful traders for years, I discovered something surprising. The best traders are often the most ordinary people. They're not constantly glued to their screens. They're not shouting every time the market moves. They're not opening 20 trades a day. In fact, if you watched many professional traders work, you might think they're doing almost nothing. And that's because they've learned one of the greatest secrets in trading. Money is made through discipline, not excitement. The market rewards consistency, not adrenaline. Why most traders blow their accounts? Let's answer the question that every beginner should ask. Why do so many traders fail? People often blame the market. The market manipulated me. The broker hunted my stop loss. The news ruined my trade. My indicator stopped working. Sometimes those things may influence an individual trade, but they rarely explain why someone keeps losing over months or years. The real reasons are usually much simpler. People risk too much. They refuse to accept losses. They move their stop loss farther away. They keep adding to losing positions because they know the market will come back. They trade when they're angry. They trade when they're bored. They trade because they feel lucky. They trade because someone on social media posted a screenshot of a winning trade. Notice something. None of those reasons have anything to do with technical analysis. They're all psychological. That's why this channel is called Think Trade. Because your biggest edge isn't necessarily a better strategy. It's becoming a better decision maker. Your trading account is like a business. One mistake I see over and over again is this. People treat trading like a lottery ticket. But professional traders treat trading like a business. Think about a successful business owner. They don't wake up every morning asking, how can I get rich today? They ask, how can I make good decisions today? They keep records. They manage expenses. They think long-term. They follow systems. Now compare that with many new traders. They deposit money, open random trades, hope for the best, lose money, deposit again, repeat. That's not a business. That's chaos. If you want consistent results, you need consistent behavior. Your trading account deserves the same respect as any serious business. Keep a trading journal. Here's one habit that almost nobody talks about. Keep a trading journal, not because it's exciting, but because it reveals patterns you cannot see in your memory. Write down every trade, why you entered, why you exited, how you felt, whether you followed your rules, whether you broke them. After 50 or 100 trades, you'll begin to notice something interesting. Maybe you lose money every time you trade late at night. Maybe you perform better in the mornings. Maybe you become reckless after 3 consecutive wins. Maybe you revenge trade after 2 consecutive losses. Your journal becomes a mirror. It doesn't lie, it shows you who you really are as a trader. And once you can see your weaknesses clearly, you can begin fixing them. Learn to walk away. This might be one of the hardest lessons you'll ever learn. Sometimes the smartest trader is the one who closes the laptop. Not because they're afraid, but because they recognize they're no longer thinking clearly. Have you ever had one of those days where nothing seems to go right? Every trade loses. You're frustrated. You tell yourself, one more trade. That trade loses too. Now you're angry. You increase your position size. Another loss. At this point, you're no longer trading. You're fighting the market. And here's something important. You will never win a fight against the market. The market has unlimited patience, unlimited capital, unlimited opportunities. You don't. Sometimes protecting your account means protecting yourself from yourself. There's no shame in taking a break. Professional athletes rest. Professional musicians rest. Professional chess players rest. Professional traders should rest too. Fatigue creates mistakes. Frustration creates mistakes. Overconfidence creates mistakes. Rest restores clarity. Boring traders usually make more money. This statement surprises many people. The traders who make the most money are often the most boring people. They don't chase excitement. They don't gamble. They don't celebrate wildly after every winning trade. They don't panic after every losing trade. They're calm, methodical, patient, disciplined. Imagine watching 2 traders. The first trader is shouting every few minutes, jumping into trades, closing trades, opening new ones, checking social media, watching 10 different indicators. He's busy all day. The second trader studies the market quietly, waits, finds one quality setup, executes it according to plan, accepts the result, closes the platform. Which trader do you think lasts longer? Usually the second one, because successful trading isn't about being busy. It's about being effective. Never confuse activity with productivity. Sometimes doing less leads to earning more. Respect every dollar. I want you to start looking at money differently. Every dollar in your trading account represents time. Maybe it took you an hour to earn it. Maybe it took a full day. Maybe it took weeks. So why would you risk it carelessly? Imagine dropping cash onto the street every time you felt emotional. Sounds ridiculous, doesn't it? Yet that's exactly what many traders do. Every emotional trade is like throwing money out of the window. Respect your capital. Protect it. Value it. Your money is your trading inventory. Without inventory, there is no business. Stop comparing yourself to other traders. This is especially important today. Social media has made trading look like a competition. People post luxury cars, profit screenshots, designer watches, huge winning trades, but rarely do they post the losses. Rarely do they show blown accounts. Rarely do they admit emotional mistakes. Don't compare your real life to someone else's highlight reel. Focus on your own journey. The only trader you need to be better than is the trader you were yesterday. Small improvements every day eventually create extraordinary results. Success is built one decision at a time. People often ask, what's the secret to becoming profitable? They're expecting a complicated answer. The truth is much simpler. Good decisions, repeated consistently. That's it. Every day you choose whether to follow your rules. Every day you choose whether to control your emotions. Every day you choose whether to protect your capital. Success isn't created by one massive breakthrough. It's built through thousands of ordinary decisions made correctly. Just like fitness, one workout won't transform your body. One healthy meal won't change your life. But years of consistent habits will. Trading works exactly the same way. Before you risk your first dollar, before you place your next trade, I want you to pause. Not for an hour, not for a day, just for a moment. Ask yourself these questions. Why am I taking this trade? Am I following my trading plan? Where will I exit if I'm wrong? How much am I willing to lose? Am I calm enough to make this decision? Would I take this trade if someone wasn't watching? If you can't answer those questions honestly, don't trade. There will always be another opportunity. Protecting your capital is never a missed opportunity. It's a smart decision. Final thoughts. Let me leave you with something I hope you'll remember long after this video ends. Trading is one of the few professions where intelligence alone isn't enough. You can be brilliant and still lose money. You can understand every indicator and still fail. You can predict the market correctly and still lose because you manage the trade badly. Knowledge matters, but discipline matters more, patience matters more, risk management matters more, decision-making matters more. The market doesn't reward the smartest person in the room. It often rewards the most disciplined one. And that's good news, because discipline can be learned, patience can be developed, emotional control can be practiced. You don't have to be a genius to become a successful trader. You simply have to become someone who consistently makes better decisions. That is the real edge. Before I end this video, I want you to remember one sentence. Your goal isn't to become rich tomorrow. Your goal is to become the kind of person who can stay profitable for years. Because anyone can get lucky once. Very few people can remain disciplined for a lifetime. Don't chase excitement, chase consistency. Don't chase quick money, chase good habits. Don't try to impress people with one big winning trade. Impress yourself by following your plan, even when it's difficult. The market will always offer another opportunity. The question is, will you still have your capital when that opportunity arrives? Protect your money, protect your mindset, protect your future, because every great trader starts with one simple decision: to think before they trade. And that's exactly what we do here at Think Trade. If you found value in this video, subscribe to the channel and join a community that believes trading isn't about gambling. It's about discipline, psychology, and making better decisions, one trade at a time. Until next time, think first, trade second.